Hey everyone, welcome to today's webinar. My name is Zach Bainter and I'm a managing partner here at Gerber Kawasaki, and I'm joined by my good friend Jessica Miller.
Hello.
Sorry, go ahead, Jess.
Thanks for having me, Zach.
Yeah, so I know some of you who are tuning in know who I am, but in case you don't, I'm one of the managing partners and certified financial planning planners, and this is Jessica. I'll let her introduce herself.
Hi guys, so I'm Jessica Miller, as Zach said, and I'm with Coldwell Banker, and I've been in real estate for the last 8 years now. So we're here to talk to you guys a little bit about how real estate's affected with COVID. Also, how people are investing their money in stocks. So
yeah, it's been a year for the record books. I think to say the least. And Jessica and I, we talk a lot. We get a lot of questions from clients in terms of what's going on and what you should be doing with your money, not just with stock market investments, but also real estate investments. So we wanted to get together and share some insights and some common questions that we're getting from clients. We just kind of think back of where we are and how we got here. It just seems that there's a lot of "are you kidding me" moments that have happened this year, and a lot of questions that we've been getting from clients about, how reactive should we be? How can we be proactive in the future? And so, I'm going to let Jessica start by talking a little bit about the current state of the real estate market, and we'll just have the conversation go from there. And before I forget, the live questions aren't working. So if you do have any questions, email me at zach@gerberkawasaki.com. You can see my email address on the screen, and then we will be sure to answer those questions. And if we're not able to get to all of them, we'll be sure to follow up with you in the future as well.
Perfect. Yeah, so I think, whether you already own your home or you're thinking about buying or you're currently looking, everyone wants to know how the market's doing right now. And I think like with everything, when COVID hit, no one really knew what to do. So what we saw at first is we saw a really big pullback in the market. So both buyers and sellers took a step back, right? Because they wanted to understand what's about to happen. Like Zach was saying, it's just been this, whoa moment. So we really did see a decline in sales. We saw pretty much nationwide, we saw like an 18% decline in April sales. And so in California here, our dip was 25%, pretty much across the state. We saw a bigger dip in Northern California, but we're definitely seeing it down here in Southern California as well. And so because in real estate, all of our sales, like our data is a month behind. So anything that closes in May would have gone into escrow in April. So our May sales were down the most. So we were down about 50% year over year, but we're seeing our June sales already pick up again. So we're seeing more properties go into escrow. But the interesting thing, and I think this is everyone's question, when they're surprised to hear that we're still doing business, the interesting thing is that our prices didn't go down. So we have less sales, but we haven't seen a dip in prices. So we're still up year over year.
Yeah, I think that in the beginning, at least, surprised a lot of people because, if you think back to the last recession, and I can't tell you how many conversations that I've had with clients where, they're thinking about, hey, is this the right time to invest? And I know we're going to be touching about this, not only when it comes to stock market investing, but also real estate investing. We'll talk about the personalization of everything, but I think it's important to note that the last recession that we saw was very much a housing crisis recession. And right now, even though we're in the beginning innings of this recession, typically what happens in these event-driven recessions, whether it's war or a pandemic. And this is actually the third pandemic since 1919. We had one in the late 50s, as well as obviously the one that we're living in right now. And typically, they're not as prolonged as your other recessions, at least historically speaking. So, I think one of the lessons that we really wanted to talk about today is, not using what we remember from previous experiences to always dictate the decisions, that we're going to be making in terms of, is this the right time, or should I wait, for real estate to, drop 20 or 25% in terms of property values? Because, Jessica and I both agree that that's not likely going to happen here.
Yeah. And I think that's a really good point, because we've had, I think, 5 recessions since 1980. And in all of those recessions, housing prices have only gone down twice. And so in 1990, they went down by less than 0.5%. So it was a very small dip. Obviously, in 2007, 8, 9, which is the one we all remember the most, we did see prices go down about 14%. But in all the other instances, housing prices actually went up, and they went up about 4.5%. So we're just not seeing any signs that they're going to be going down right now, because it's driven by supply and demand. And the supply has been pulled back, and so has the demand. But in relation to one another, we still have a really tight, supply for the demand that's out there.
Yeah, and a lot of times I think it's important to know that real estate can be localized. And Jessica, I know, operates in the Los Angeles market, but having clients myself all over the country. Actually, one quick story. I have a really good friend and client who's relocating from Atlanta, and he flew up to Minneapolis, started looking at properties. And when he flew home to share all these great properties that he saw with his wife, they all had accepted offers. So, that's, just one market in Minneapolis. His realtor in Atlanta is telling him that it's a very competitive market right now. So, I think that's, just really important to also, keep in mind that what we're seeing right now is happening in a lot of different markets across the country.
Yeah, and you're absolutely right. Like, real estate is a very localized thing, but we are seeing multiple offers in every market, because every market has restricted inventory. New York is one of those markets right now that's slow, understandably. But here in LA, it's just like what your clients are experiencing in Atlanta. It's multiple offers. And so I think it's surprising for people who aren't out looking to hear that. If someone's waiting to buy, or they're just not in the market to buy right now, they're not out there seeing how many other people are at all of these showings. And they're not experiencing the multiple offers.
Yeah, let's talk about the showings, because I've been getting some questions from clients. Obviously in the beginning of COVID, it was impossible, at least in Los Angeles, to leave your homes with the stay-at-home and shelter-in-place order that we had. But how has COVID changed the showing process? In your opinion, what are some great tools that are available to you now, and in a way making it better for you and your clients?
Yeah, so just like everyone else, we had to adapt quickly. We were an essential business, so we were still doing showings, but they're very restricted. So we can't do open houses still. So you guys have probably noticed you're not seeing all the open house signs. It is by appointment only. And the reasons for that are obviously to keep people safe. Also, before we do showings, we need to have certain paperwork signed. So we need disclosures signed, so that people know the rules they need to follow to go through a property. And as agents and all the sellers, we need to keep the properties cleaned for everybody. So everyone's wearing their gloves. Obviously, we're wearing masks and booties. We're sanitizing between showings, but we're restricting the number of people that can come into a property. So it's always going to be 2 people per household and their agent.
So it doesn't sound like it's been too prohibitive at this point. Or do you have any clients who are still pretty uneasy about going in and making offers sight unseen, or using you walking through with FaceTime, or are there other I guess ways that you're having to show houses other than taking the precautions that you're mentioning?
Yeah, so it's actually been pretty neat. So we've done some FaceTime showings, and usually that's just before we get everyone together to do like a in-person walkthrough, we'll just do a FaceTime tour. And most agents have been really good about doing virtual tours online anyway, so that anyone can see it first. So they want you to watch that first to make sure you've been able to really understand the property layout. And then we'll book an in-person showing. So most people are still going out in person. Because of the precautions that we're taking, they feel pretty comfortable. I do have some clients that are waiting. Most of them are waiting more just because of job related issues. They want to just make sure that they're in the right financial position. It's not so much about not feeling safe going to tour property.
And what about, are you getting a lot of clients that are asking you, because I'm getting this question a lot too, right? Obviously the stock market, I'll talk a little bit about that because I know some people tuning in are wanting some insights on the stock market as well as the real estate market. And, to take a big step back, we started 2020 off on a really good foot. The stock market was up nicely till around mid-February, which that's when we started realizing, as I think a country, how serious this pandemic is and what the economic ramifications would be for closing down. And all that uncertainty led to really one of the worst, if not the worst, marches that we've seen in the history of the stock market, and the quickest drop from the top of the market to what we think at Gerber Kawasaki will likely be hopefully the bottom here for at least this part of the cycle. But it happened really fast. It scared a lot of people. I think something that Jessica and I wanted to point out in terms of differences, we feel very strongly that, stock market and real estate market are very much long-term investments. I know a lot of questions that I get are, is now the right time, right? And I know, Jessica, I wanted to ask you, are you getting a lot of questions? And I'll give my answer in a moment. But are you getting a lot of questions from your clients about possibly waiting? Because right now, there's been stimulus checks. Obviously, individuals cannot be foreclosed upon because there's government mandated forbearance. And obviously, if you're a landlord, you can't kick your tenant out right now. So are you having some of your clients pause to wait to see how the rest of the year pans out? Or what sort of advice are you giving to clients in those situations?
Yeah. So overall, most people are actually wanting to step up and buy. The reason being is the interest rates are so low. And so I think anyone who was planning to buy before COVID hit hasn't changed their mind. They still want, if it's a first time home buyer, they still want to make that leap from renting to owning. So they're still interested in taking advantage of the low interest rates and getting into their first home. What we're seeing is actually, since everyone's spending more time at home, they're realizing that they need more space. So I have several clients that they don't have space for two offices at home when they have two people working at home. So we are seeing a shift towards people needing one or two home offices, or maybe wanting a home gym, and wanting more outdoor space. So I think that home is more important than ever. Everyone's spending all their time at home. And so that's where they want to invest their money as well.
Yeah, I think that's really interesting with this whole work from home movement that we're starting to see here. And just, I guess people, like you're saying, not needing to be so tethered to, the office 5 days a week. Are you seeing any clients that are extending their searches in terms of going, let's say more than an hour or hour and a half outside of their workplace?
Yeah, so that's been such an interesting part of this pandemic, that it's so different than what we're used to, is that people are willing to move further away from work. And the reason being, like you said, is they're working from home. So I do have clients that are interested now in moving to other parts of Southern California. Now they don't have to go into the office, so they're extending their search because they can be anywhere. And we're also seeing people come down from San Francisco and make the move to LA because now they never have to go back in the office. So a lot of people in tech are moving.
Are there certain areas that are surprising to you that are seeing a lot more demand than before?
I guess it's not really surprising, but it is a shift towards more suburban life. So before, people wanted to be in the middle of the city, walk to the restaurants. Now they want to have a little more space. So we are seeing a demand, and this is true across the country. I've been on calls with agents all across the country, and they're saying everyone wants suburbia right now. They want that additional space for their family because now they're suddenly home with multiple working parents and children, and they just want the space. So, and I think people don't know how long they're going to have to work from home or teach from home.
Hmm.
So, having that extra space is really valuable. So, I think we've seen a big shift like that.
Yeah, very neat. Yeah, and so let's talk a little bit about because I know, like I just said a few moments ago, I get the question all the time about timing or hey, the stock market's gone up, the real estate market has gone up, and I'm a firm believer that very similar to most things in life, you should come to a personal decision that
Mhm.
just because something's worked for a friend or a family member, you shouldn't have this like fear of missing out, which a lot of times I think drives a lot of decisions these days. And
Mhm.
instead, just make sure that you have a plan in place that makes sense for your situation. And I know it's pretty cliche, but it's a very powerful tool if you do it appropriately and for your situation. And what I mean by that is, a lot of my clients, I'm really proud of the fact that none of them really, other than having to, maybe trim, a little bit of stocks, but I was able to keep most of my clients invested in one of the worst, like I said, Marches that we've ever seen and the quickest drop that we've seen. And that's because there's a plan in place.
Mhm.
And, I think that's really important too when it comes to the home buying process to make sure that there's a plan in place, that you're not having to tap all of your cash reserves, for example, in the event that this black swan event is really what we refer to these events as, where we can't really predict them, and they have dramatic and sometimes unintended consequences. So,
Mhm.
typically, when you have that plan in place and you're making an offer on a property, and this is something that Jessica and I work really closely together on with some clients, is just to make sure that you have this cushion. So if something were to happen in terms of losing a job or having a pay reduction, you're not having to force sell. It's a lot easier to look at your stock investments and think, hey, I see them going down every second, or hey, I see them going down every minute, and kind of playing into that herd mentality and succumbing to fear. I think it's different when it comes to real estate, because if I want to sell my house,
Mhm.
I'm really not going to be able to do it right this second. Whereas if I want to sell Apple and the stock market's open, I could turn around and sell Apple. So, something that I wanted to talk a little bit about is trying to think about your real estate investments and your stock market investments very similarly, that are long term. And often I'll get asked too, should I buy this house or should I wait next year? Should I wait until the recession happens, or should I wait until something happens that
Mhm.
ultimately is outside of any one person's control? And the reality is you should basically not be worried about things that you can't control. And as long as you are making an investment, whether it's real estate or the stock market, doing so in a way that isn't going to, if something were to happen that you can't predict and control, it's not going to jeopardize your situation. And that's where a lot of clients who have had pay cuts or job losses, if they have those reserves and they're in a home that they can't afford, it's a lot easier to obviously hold on to that. And so let's talk a little bit too about the differences. I know in '08 there wasn't as much
Mhm.
equity, I believe, in a lot of people's homes as there is right now.
Yeah, and so that's a really good question that I'm getting to from so many people. Is everyone is asking, is this going to be like 2008? Are we going to see housing prices go down like we did back then? And the difference that you touched on in the beginning, Zach, is that that was a housing crisis and this is a health crisis. So the housing crisis was driving the problem in 2008. We had subprime mortgages, so they were just giving money to anybody. And a lot of people didn't have very much equity in their homes. And we had a big supply of homes. They were building like crazy. We went into 2020, like you said, really strong in the stock market, but also really strong in the housing market. So we had a low supply and high demand. We had a really healthy housing market. And we didn't have lenders giving out bad loans. And if anything, lenders are being more careful. If any of you have applied to get a loan in the last few years, like you realize all the precautions they take and the sheer amount of information you have to give them, when you're applying for that loan. So they did tighten up on lending when COVID hit. So it is
Hmm.
a little bit harder for people to get the loans, which is actually a good thing. They're making sure that they're not giving out money just
Yeah.
left and right to whoever. And it's a really different climate that we're in, where people do have equity in their homes. And I think, like you said, if people didn't panic in 2008, and I don't want to downplay that people were definitely impacted by it, and some people had to sell, but if people didn't panic and sell out of panic, then they were able to make it through, and their value in their home came back. So it's like that, like you said, long-term investment, and being able to hold it. So I think right now people are trying to get in, and take advantage of those low interest rates, because the interest rates are really what determine, what you're paying for that house, not so much the actual purchase price.
Yeah, and that's, I think, really important too, because a lot of times, I'll have clients come to me and say, "Hey, I'm being told interest rates are, low, and they're probably going to go up, but um, the home interest rates are more often than not pegged to other interest rates, and
Mhm.
we're told by the Federal Reserve that interest rates are going to be staying low for a while, and that more likely than not means that we're going to still be in this low interest rate environment for a period of time, just like we were in after the last recession." And
Mhm.
actually, there's a question that just came in that's tied to this, so I'm going to ask it now instead of later. Are appraisals being affected in any way? And you just mentioned about the loan amounts and our approvals. How restrictive are they? If you could talk a little bit about that, is a question I just got.
Yeah, perfect. So it's interesting. Appraisals are being done differently. So with new purchases, some appraisers are still going out to the property, and they're going through the property as they normally do. Other times, appraisers don't want to go inside the house, which is understandable. And so they're doing drive-by appraisals. So they'll actually go by the house, and they'll call the homeowner, and they'll have the seller walk through the house on video with them. And then they'll be able to say, "Oh, can you turn to the left and show me that room?" And they'll be able to kind of guide the tour that way. So they're getting creative with how they see the inside of the property. That doesn't work as much with refinances. So I know that a lot of people are refinancing right now to get those lower rates. A lot of times they do need to come in the house for, especially for like a cash out refinance. But as far as lenders being more restrictive, they're looking for higher credit scores. They're really looking for that 20% down, but there are tons of lenders that are doing less than that. I have clients utilizing that as well right now. They're just restricting how much money they can give. So they might loan less on, if you're doing less than 20% down. So they're just a little bit tighter. And of course, then they have to do an income and employment verification right before closing. So it's, people are losing their jobs, or they were, in the last couple months. So right before closing, they're making sure that they were still employed. And actually, on that note, we have some neat ways that we're protecting buyers right now. So people are nervous, at least in the beginning, especially in April, they were nervous to put an offer in because they didn't know if they were going to lose their job, right? So it was a little bit unsure of how everything was going to play out. So we have addendums that we can put into place that actually protect the buyer. So they can use it if they are worried about their job, or maybe even worried about getting sick, and they can get out of the transaction if they're impacted by COVID. So we have ways to make sure that buyers' money is protected and make sure we can get them out of the deal if needed.
So they would get their earnest money back in that scenario. And
Yep. Yeah. And as you know, like, once you remove contingencies, you normally can't get that money back. But if it was a COVID related issue, you could.
another question that just came in that I think would be a good time to ask this, and I'll let you take a stab at this first, Jess, and then
Mhm.
I have my own thoughts. How much of what we're seeing right now is, like you were saying, this, in a way, this pent up demand, or the individuals who were already wanting to purchase a home pre-COVID, and
Mhm.
then there's obviously a lockdown and a shelter in place, and it probably intensifies that urge and desire to do so. What is your thoughts? And is this just going to be, a continuation, or, once this pent up demand kind of dissipates, are we possibly going to see a lull, especially with possible, foreclosures like we're talking about when there isn't a government mandated forbearance?
Yeah. So I think there's a lot of millennials that are ready to buy. So we're seeing a lot of people who are wanting to make that leap from renting to owning. And I think that, pandemic or not, if they're looking at their finances and what they're paying for rent is similar to what they can pay for a mortgage, or they get the tax benefits of home ownership, they're going to still make that move, right? So we're not going to see that go away. We are seeing some people take their homes off the market and decide not to sell because they fell in love with their house again.
Hmm.
So there's, it's different for every person. Um, but we're not anticipating a slowdown because we have so many buyers and so little inventory. So hopefully our inventory will increase to meet the demands of all the buyers.
Yeah, and again, going back to what we said in the beginning of this webinar, in respect to a lot of times real estate, is localized, and I think
Mhm.
it's important knowing that a lot of people who are listening in are more likely or not in the Los Angeles market. We live in a very unique place, and I think that's another important thing to keep in mind for those listening, that the sunshine tax is the joke that I hear all the time, but it's true. And I'm hearing from friends who run businesses and friends who live in big cities like San Francisco and New York, in respect to this work from home movement that is going to be happening more so for technology based companies,
Yeah.
where individuals are obviously, if they had to decide between living in San Francisco or Los Angeles or New York, just based upon the weather alone, obviously we have the best weather of those three cities. We could debate which city, one could live in. Obviously, there's personal preference there, and everything. But, there's a lot of, data and anecdotal stories that I'm hearing from individuals who, despite their possibly being, a slowdown or a lot of foreclosures in, different parts of the country, there's a lot of reasons to believe that Los Angeles will continue to not only see that demand, but when you couple it with, like you're saying, the limited supply, at least in the
Mhm.
more desirable locations, that's, I think, going to help it up the market as well.
Yeah. And I don't think we're going to have an influx of foreclosures. I'm not going to say we're not going to have any. At any given time, it's possible to have them. But it's nice that the lenders have been working with homeowners. Forbearance has been very helpful. I think that's going to change things so that people aren't forced to sell this time around if they're able to make it through and get back on their feet. And that's stuff that we didn't have in 2008. We had a flood of foreclosures. Everyone was hit at the same time. And so I think that the way that this has been handled, there has been a lot of money pumped, back into the economy, trying to help people be able to make their payments and creative ways of helping them delay making those payments. So obviously not forgiving them, but putting them at the end of their loan, for example.
I'll talk a little bit more about that too, because I think the government's reaction during this, or in response to this recession, was a lot faster
Mhm.
than it was right after what we saw happening, excuse me, with the meltdown of the almost basically the financial system back in '07, '08, and into '09. It took a really long time for government to basically say, hey, we're going to do what we can to help save certain companies and basically inject money, into the system to help keep it afloat. And that did happen, with TARP and other ways. And it is happening right now. And it did the record timing, from my personal point of view, that helped not only provide some confidence, but, in a way it put, at least for the stock market, since the middle of March, if you look at a chart of the stock market, aside from, a few days, really, it looks like just a straight line up. And ultimately, if you look back at what events happened around that time, that's really when the Federal Reserve said, hey, we'll be the buyers of last resort, for a lot of different investments, for a lot of different securities. And that happened within a few weeks of this. I don't want to call it a meltdown, but this financial pullback. And so,
Mhm.
going back to another, real lesson that I personally am hoping to drive home, no pun intended, today, is thinking again about the stock market as a longer term investment, even though it prices every second during the market's open, because if you didn't panic sell in end of February or at any point in March,
Mhm.
right now, the overall stock market is pretty darn close to the all-time highs that we saw before this happened. Now, we could debate, how sustainable that is. Our point of view at Gerber Kawasaki is we're more likely than not due for some correction here over the next several months for a lot of different reasons. But again, it's important to look out, not just, what we think is going to happen next week, next month, or even towards the end of the year, but thinking about the next year, 2 years, 5 years from now, and that's really where you win and make money. Not only in the stock market, but also the real estate market. You don't want to diminish, what's going on. And obviously, the more information that you have to arm yourself to make decisions, the better. But in my experience, those clients who tend to make money with their investments take that long-term view. And so that also, again, plays into not looking when it comes to the stock market, when it's down. I tell and advise clients, don't look at the screen, rely on me for information. And when I do reviews with clients, a lot of times I'll just say, hey, are you familiar with where we're at? Oh, I haven't looked in the past couple months. Those are the clients that tend to be happiest too. So that's just a little bit of advice there as well.
Yeah.
Let's see if.
And so are you seeing people, like, what advice would you have for people right now that are nervous about starting to get into the stock market?
Yeah, like anything else, it's cliche, but you've got to take an inventory of, your financial situation, right? And make sure that investing in anything is appropriate for your situation, having that plan in place. I think it's really important to, I think a huge reason why most of my clients didn't panic and didn't want me to panic sell for them is because they know that their stock market investments are not for their spending in 2020 and usually not for their spending in 2021. Their stock market investments are in their retirement accounts. Their stock market investments are in their non-retirement accounts that they know that they don't plan on spending for several years down the road. And so one of the things that we do here that I do with my clients is educate them and let them know that what they have invested in the stock market specifically is for the long run. And when the market pulls back, because it's never like if, it's always when, because things happen in cycles, and it's actually a really healthy function for the stock market to pull back. We don't want it to go straight up for a number of different reasons. But those clients who really understand the long-term nature, it's a lot easier to handle a very scary March like we saw. And I don't mean to diminish what happened. It was very terrified. But for those who maybe had 2 or 3 different stocks versus those who have a well-diversified portfolio of stocks and bonds and real estate, those clients definitely were able to handle that scary moment better. And that's something else. A lot of questions I get from clients are, what should we do? How should we react to this situation? And if you have a plan in place, you don't want to be reactive. You want to be proactive, before the storm comes. Hurricanes come in, you're not going to go out and run to the store and get things. There's probably not anything left, if you even make it to the store, right? And so, I think that's really important to, keep in mind, because this crisis that we saw is unique. I think it's not likely that we'll see a pandemic like this anytime soon. Like I mentioned, if you go back in history, we did have one in the late 50s. We obviously had one in the late 19 teens that everyone is referring to, because that was the last kind of like global pandemic. But ultimately, we're going to have another crisis at some point. That much I'm sure of, and I know what it's going to be called, what it's going to look like, when it's going to happen is really anyone's guess. And so making sure that you have a plan in place that makes sense for your situation is of the utmost importance, whether that's cash on hand because you lost your job and or got a pay cut and you're not having to force sell your stocks when they're low. Those are the clients, obviously, that are able to weather the storm in a way to where they're not going to jeopardize their long-term plan. As it pertains to the stock market specifically, typically when you have an oversold stock market, one that's going down rather quickly, like it did in March, those periods of times are typically followed by what I'm referring to as an overbought market right now. I do think that the markets ran up a little bit more than it probably should have, in the near term. And that's what I was just mentioning in terms of a correction, but at the end of the day, the market is looking out ahead. I think that's another important thing to consider as well, because some of the questions I've been getting from clients are, Zach, as of this morning, there's 20 million people that are collecting unemployment benefits, which is, another record number. How can the stock market be close to an all-time high? And it's really important, and no other time in my career has it been more obvious that the stock market is not the economy. The stock market is looking ahead and thinking where the economy can and should be, into the future. And it usually looks ahead, let's say 6 to 9 months. But the uniqueness of the situation, I think a lot of investors are more looking at 2020, the end of 2021 and 2022, in anticipation of a vaccine and the fact that the entire world is, in a way, coalescing scientifically to come up with more cures and a hopeful vaccine to where we can, quote, get back to a more normal economy, whatever that means, into the future. So, yeah.
Yeah, that's all such good information. And I think the long-term thinking is so important. I know I didn't panic at all when this happened because I knew that you were taking care of my finances, and I know so many other people that you take care of. And it was nice to just not worry about it. So thank you for communicating, because your communication is always so good too.
Yeah, I think I appreciate that, for the feedback. And, I think that's the most important thing too, is just arming yourself with information, having that plan in
Mhm.
place, and just knowing that, at least in the stock market, those returns happen rather quickly. And, for the housing market, what I think is the best thing about housing is what we are mentioning earlier, where people just can't, turn around and sell it and cash out in a day. Because that's a lot of times what, clients will ask, where, hey, should I be, investing in stocks, or should I be, investing in bonds? And, really it's all about the diversified, portfolio, and making sure what you're doing, works for your situation is kind of one of the biggest takeaways I'm hoping that everyone gets today.
Yeah. And are you seeing a lot of your clients putting more money in right now, or just kind of holding steady?
It depends on the time frame. It depends.
Yeah.
Is kind of like the number one answer, because everyone is well, most people are in their own unique stage of life.
Hmm.
And even if you're in a similar stage of life, your experiences when it comes to money are different. My experiences when it comes to money are different than your experiences, even though we're a similar age. So
Right.
really understanding who you are, when it comes to that situation, I think, helps. And that's part of the discovery process that I do with clients personally, is really
Mhm.
understanding how they came to be, financially speaking, where they want to go, and
Mhm.
then putting together a plan that makes sense for their situation, which of course includes the investment recommendation. So, if someone's higher risk and they're young, and they've had investments before and they didn't sell in this previous March, and they didn't panic sell in December of 2018, when that was another really nasty time in the stock market. These are all questions that I ask individuals if they've invested before, because that gives me an idea of how aggressive or conservative approach I should be taking with clients. Because at the end of the day, my job is to design a portfolio that's going to allow people to sleep at night. And some people can sleep at night, okay, that they're down 5% in a day, and relatively okay, right? And then there's some people that they wouldn't be able to get any sleep at night. So really having those conversations is of the utmost importance, because the answer is going to be dependent upon the my recommendation is going to be dependent upon those answers.
Mhm.
But right now, longer term, there's still a lot of attractive parts, not only of the stock market, but the bond market, that we like, depending upon the situation.
Yeah. And I think that's great that, it's important to remember that the answer is going to be different for everybody. And it's same with what to do right now with the housing market. I have clients asking, should I sell my house right now? Or should I buy an investment property? And it all depends on what their goals are. Like, why are they selling? What would they buy? So it's really, you can't just have one answer to tell everyone this is exactly what's happening, what you should be doing. You have to look at the whole picture and see what their goals are.
Yeah. Let's see. Let's see if any other questions have come in.
I wish I could see all of you guys that have
Yeah.
joined us today. Thank you guys for being on here. And like Zach said in the beginning, if you guys have any additional questions or questions that we don't get to, feel free to email us and we'll make sure that we get you answers.
No. No other questions right now.
All right, perfect.
So I think we're going to wrap this up for today. But like Jess said, email us if you have any questions, and we're happy to talk with you guys about your real estate and investment questions and needs.
Thanks so
Thank
much,
you.
Zach.
Bye.
Bye, guys.